here for our live session. How could you put it any better? Wow, crazy bounce. Wherever you are right now in the world, I hope you're well and doing great as we get going here today. And Bitcoin here up 8%. Ethereum just tagging double digits. And the bounce is on. Did you see or did you catch the Nasdaq was just coming into a very important level, already up 2.5% today. We will check back into that later, but I first want to kick this session off focusing on Bitcoin and what we are currently projecting may be the next step over here. But Nasdaq, you can see on the 7-minute time frame this morning, you could see on the data today's jobs list numbers coming in and reacting very well. And then you see on the US Open, 9:30 a.m. Eastern time, sharp and quick pullback. And that was nothing more than, right, a nice breakout, retest, resumption up. And you can see we're in an area over here of important resistance right now. If I zoom out a little bit, you could get a better view. And you could see on the 2-hour time frame, this bolded structural line coming up. You could see before the gap, the low of this day over here, Friday, August 2nd. And then we gapped down below it. We tested that once, twice. We peaked above it just the other day. And that's the level that we're currently testing in. If I come to the 8-hour, you get even a better look at it right now. And you can only see that. You can see the confluence. You can see the resistance over here. And you can see that we hit a double level this morning. So right now, market's pulling back after being up 2.5%. And we got an important area to reclaim. As you look on the daily time frame, you could see this. You could see, right? You could see that wick coming up from Tuesday. We made the higher high yesterday and then sold off very, very hard. And right now, we are just coming back in towards that area. We would like to see, I would like to see us be able to take out, obviously, the high from yesterday. But right now, we are just coming back into an area of resistance. If we sell off today, remember yesterday, the awareness we were looking at, by the way, when we were talking about, where I was pointing out during the live stream a couple of different times, I was saying, not looking at the chart, but I was talking about that bearish continuation pattern and watch out as we test the support. We wound up breaking through that. And then you could see that this morning finally making the recovery. If we sell off again and leave another big wick, that would be concerning. The thoughts about what is causing today's bounce, we're going to take a look at today and cover from multiple different angles, including my own. I appreciate the love, the support. Anyone here, enjoy being here. Go ahead and make sure you do go ahead and just smash the like button. I know that it gets me pumped up. Yesterday on the live stream, we were looking at this pattern developing. We pointed out on this chart right here together, we pointed out this broadening wedge, what it looked like to us. And it seems to me that a bunch of people are focused in on the same thing. This is a tweet from Peter Brandt, and he's pointing out, look, it looks to me that this is a broadening triangle. And he does point out in the tweet, though, that the broadening triangle should have a horizontal top over here. And then what's interesting in the comments, you see that, well, remember what Bitcoin did back in 2020? It did have that same broadening wedge, and it was a downward sloping trend line, as we're seeing occur here right now currently with that downward sloping trend line. And then you could see right now, they say risk of recession. I don't think that was risk of recession. I think that we were looking at that in the lens of that seemed to be the turmoil caused by the Japanese yen carry trade unwind. So let's go ahead and continue putting these pieces together over here. So a lot of people are talking about, well, no. What we're seeing right now is setting up for the same price action we saw out into the COVID crash. Remember yesterday on the Nasdaq, we looked at that and we said, you know what? The first down leg was about 17%. We then bounced up and we just said, watch out if you take out the bottom. That would be late. Horizontal is always very late. We would be setting that up through some type of trend line and watching the price action as it continues to develop. I'm going to go ahead and back up and get back over here. And I had something pulled up over here. And I think what I'm looking for is that JP Morgan is saying 75% of global carry trades have been unwound. Amazing what 24 hours can do. Yesterday, the projection was that about 50 to 60% of the carry trade had been unwound. Today, headlines reporting that potentially that is 75%. It seems like a lot of the damage has already been done. And it seems that, like as markets generally do, that when there's fear and uncertainty, you see that excessive moves. Question is that was that an excessive move? And are we now going to be able to recover, potentially even breaking out above the top of that resistance and then setting up a nice move? I'm reminded of seasonals, though. And I just want to bring up during an election year, don't forget that seasonality suggests when you're looking and focus on the red one, focus on the bottom red one, and look at that price action. You could see throughout August, September, and then before the election, September into October, and then into the election itself is a lot of pressure. That's the seasonalities that we're currently watching and witnessing as we have an open field. So just be aware as we talk about what is potentially developing over here. There is, like, as always, we need to do what it takes to stay on the right side. Take nothing for granted and follow the market as it leads. Let me jump over here and continue going. And I wanted to first focus on, okay, the unwinding of the trade. People pointing out that the current pattern is no different. You can still see the broadening wedge. It looks like what happened in the Nasdaq correction into October 2023. And this was over here. And if you remember at the bottom, I remember at the bottom here, as we peaked below it, that was a major breakdown. And then we watched and we talked about the recovery above. And then as we retested this line, what we called was that we would be looking for price to retest the top of this channel. It happened and unfolded within days, a lot stronger than expected. By the way, the breakout of that channel wound up leading to some very favorable price action. Are we setting up and seeing something similar now? I mean, today's price action, if you look at the thumbnail of this video, the titling and everything was done as price was a little bit lower, a few percent lower. It's nice seeing Bitcoin up 8% on the session. It's nice seeing Ethereum up 10% on the session. It's nice seeing indexes, Nasdaq, S&P 500, Russell, and the Dow all up 1.5%. It's nice seeing green across the board. And could we continue to see some quick price action unfold, similar as we did November 2023, and then leading to that super strong move? Listen, I don't personally think that today's price action, and I could be wrong, a lot of people are thinking that, well, it's the jobs data that set off this move. I can't argue with the price action in so much as that it was off of the jobs data that the Nasdaq began to shoot up. Not just the Nasdaq, Bitcoin and crypto with it. I mean, for sure, that's a big catalyst that we're looking at. Stock surge on a small drop in initial claims. And this is what I focus in on, though. Continuing claims hits a 33-month high. And even though you see the drop today, you could see the red line above, continuous claims continues to grow. And it is now at the level it was in November 2021. You could see it right over here. So is the market pricing this in as good news? Is it bad news that is perceived as good news as we're getting ready towards a cut? I don't know. If you look at probabilities here, today's data, it actually decreased the, I shouldn't say just data. It's obviously a whole host of different data points, including price action, including what we saw on that relief rally occurring. But the odds of a 50 basis point cut have now been diminished. So it's hard to tell. It's hard to tell. The price action suggests that it's the jobs numbers here that has set that off. I personally, my own personal belief, my own personal feeling is that this is coming largely from the de-escalation that we're seeing in the potential response from Iran. Iran was expected to retaliate as Israel had assassinated the Hamas leader. Sorry about saying Hamas leader. Someone from Hamas inside Iranian territory. And it seems that once again, we're seeing a lot of calmness occur instead of just escalating tit for tat. Once again, it seems that the situation tries to be escalated, and once again, we're seeing that they're just not biting. I think that plays a role. That's my own personal belief. I don't think that we're out of the woods yet by any means. Nevertheless, we're going to continue to watch and see whether or not the Japanese yen unwind had led nothing more to an event over here that, as Bitcoin hit its largest drawdown for this cycle, is going to lead to a lot of upside spring right now. That's what we're continuing to watching for. In the same breath, and warning, technically, this looks like we've had a cycle top already. I don't personally believe that. When we talk about cycle top, that I'm going to define that. That would mean, and we view this off of the 4-year halving every 210,000 blocks, miners reward cut in half. That would mean that we're not going to have a new high in Bitcoin until after the next halving. Now, is that possible? Yes. Is that probable? Likely not. So what I view this at, though, and you can see over here, it's pointing out that the RSI has peaked lower and lower and lower each time. You can see the peaks, and the peaks, and now potentially what could be the peak. And it's being introduced here is that the elasticity has gone out of the PA, and that the way that I personally view this, however, though, is I view this as a coil. I view this lowering of the RSI over here as a coiling. And notice the divergence here as the RSI continues diminishing. Notice how price is staying flat. I view this as a coil, and that we're going to see eventually on the next top a much higher RSI reading than we just saw. If we could view this in the lens of 2019, 2019 would be over here. And that was the June, right over here, the June 2019 top. And then you could see the next top in 2021, November 2021, was much higher. Actually, RSI is suggesting April 2021 was much higher. Now, imagine, if you will, that this was something similar to the June 2019 top with the RSI above 70, and that the next move is going to be higher as this one was. Well, this seems to me that if we're consolidating here and coiling, that the next move up could be quite significant. That's how I view it. And if you remember, this is going back to April, end of April 2024. At that particular point in time, there were a lot of good. This is April 2024, Bitcoin at 67,000. There were a lot of expectations that we were about to hit the next major leg up, 80,000 Bitcoin, which could have happened easily. 80,000 Bitcoin, some people suggesting alt season's about to pop off. We're looking at 120,000 Bitcoin. And during that time, I was presenting, this is actually a little before that. It was the week or two before that. But I was presenting that, watch out, 2019, as the Fed's next action is setting up a rate cut, Bitcoin did not react favorably. It actually went and underwent I forget what the exact amount of the it was over 40%. It It was well over 40% actually of a drawdown off of that peak. And at this particular point in time, we were looking at quantitative tightening occurring, balance sheet runoff occurring. We were looking at the Fed moving towards and into its cutting portion of the cycle. I was pointing out we're towards a similar point in time, something to be aware of, something to watch out for. Now, has that been erased? I personally don't think so. I personally think that what we saw was a lot of result of the Japanese yen carry unwind. It brought significant turmoil into the market. I think that the same fundamental dynamics exist in so much as that the Fed is still running off its balance sheet. Watch the direction of the balance sheet, which way it's going. And I think that the Fed's next move, like Powell said, the bar is really high that the next move would be a hike. Of course, it's possible, but markets and logically speaking, next move is going to be a cut. And again, what matters into that cut, a lot of people think that that's very bullish for the market. What really matters, look at the very bottom of the chart. Look where it says cutting into normalization. And you can see when they're cutting into normalization, if you go 12 months out, S&P 500 is up 13%. But look what happens when they're cutting into a recession. At the very bottom recession cut, on average, you go out the same 12 months, S&P 500 is down almost 12%. What do you think is happening? Do you think that the Fed is getting ready to cut into a slowdown, into a recession, or do you think that they're cutting into normalization? It's not a very, I saw actually Ben over at Benjamin Cowan over at Into the Cryptoverse showing us or pointing out that the SAM rule has just been triggered, and a lot of signs, including the continued growing cracks we see in the job market, they all point to a potential slowdown. I am in the camp that we are headed towards a slowdown. Now, the one caveat, and most important, and let me bring that up one more time, is there's a third option over here. It's in the middle, and it's a panic cut. And if at any point in time we hit something of a crisis 12 months out into those cuts, because those cuts come in rapid. The reason those cuts are coming in rapid is because the Fed is getting ready to restart quantitative easing, outright security purchases. That's extremely bullish, but buckle up, because from the time they begin cutting until they actually start the QE, markets will be under, that's the moment that the markets are crashing. Markets are not crashing more often than not, but when they are crashing, it could be quick and it could be swift. What we saw over the last week was really nothing more than just a simple pullback, and pullbacks happen often. And pullbacks, there was actually data I wanted to bring up for you that I don't have it off the top of my head. Off the top of my head, it would be wrong. 5% pullback occurs in the market on a yearly basis. 9% pullback in the market occurs every 2 years. And then it's the third and 4 years that I forget. I think it's over 20% pullback occurring every 4 years. What we've seen occurring right now as the Nasdaq pulled back 17%, 2023, it was almost up only on the Nasdaq. What was the biggest pullback we had in the Nasdaq during 2023? Let's move over to the daily chart. 2023, I think this was the biggest pullback. If you remember, around this area too, we were setting up and looking for it. 12% pullback, so it wasn't up only, far from it in 2023. 12% pullback is decent, no question about it. And then over here, we had another 8.5% pullback. I guess for me, that would be volatility begets volatility. And off of the lows, October, as NASDAQ is up almost 100% in that type of perspective, a 12% and an 8% pullback is really, really, really nothing. Let's continue. And over here, I think this is worthy of bringing to our attention, and it's presented as I'm pretty sure something is happening behind the scenes. 404 1,000 Bitcoin. That's a lot of Bitcoin. So we're looking at 21 million Bitcoin, right? So 2.1 million Bitcoin would be 10% of the supply. 1% would be 210,000 Bitcoin. This was almost 2% of the total supply of Bitcoin. And that is just overall coin. That's not including the amount of coins that have been lost and are gone forever, have moved to permanent holder addresses over the past 30 days. It is clearly accumulation occurring. Now, that does not mean and or suggest that we're going to see something like this occur, where we boom and shoot the sky. That's more long-term fundamentals. And again, that's extremely bullish, but that's something that could point more to, as we were looking at the RSI. Let me just go ahead and pull it up over here if I could find it with you. That's something more that could lead to this actually being really favorable, being nothing more than an enormous coil, and being something more like this that is going to lead in the future and before the next halving. Again, the hardest point of the whole cycle is actually right now. It is right now. It is the time between the Fed moving towards those cuts. And again, if it's cuts into normalization, it's going to be smooth sailing. It's going to be a lot like the 2017 cycle, where it was cruising. Do you remember what that looks like from a drawdown perspective? 2017 was over here, and you could see boom, or from a price action perspective, I should say, drawdowns were quite significant, 30% regularly. It was early on. You come to 2020, man, that was a bumpy ride. That was a bumpy ride, and we don't know what's in store going forward. By the way, that's a good lead into what I want to talk about next. When I say we don't know what's in store, a lot of people get very comfortable. What do I mean by that? Their plan that they have diligently worked towards, in so much as that they have spent a lot of time listening to other people's opinions in order to form their own. They probably have listened to really hundreds of hours of podcast and video. They have really tried to learn about money, about sound money, about the Fed, about central bank activity, about the dollar debt-based system. And they've decided that they're betting on Bitcoin. And that means that Bitcoin needs to continue up and to the right over the long term. Now, of course, every single one of them, or most of them, realize that means that in the course of Bitcoin's adoption, they could see bear markets. Those bear markets could have, like in the past, something like an 85, 77, 84% drawdown. Those were the big drawdowns of bear markets. In between, we've had major drawdowns, 61% during the lockdowns, 55%. You can see them all over here. I don't need to go over them with you. And you can see all of the drawdowns and the extent of them. Here's that 55% drawdown in 2021. And a lot of people are comfortable with stacking stats in order to realize the ultimate goal, because they don't have any type of low time preference. They are looking for an out a decade or more. I've pointed out that one of the risks is that, and I'm going to go ahead first, have Michael articulate it. This is Michael Saylor, who has taken an extraordinarily big position personally and through MicroStrategy in Bitcoin. He owns 1% of the supply now through MicroStrategy. Is that correct? Over 210,000 Bitcoin. He's talking here with Matt Odell. I'm going to play a minute over here so you could hear something that he points out. This is something that I have pointed out when we talk about betting on Bitcoin. Let's go here, Michael, here.
I mean, so you think the tax treatment is the major hurdle. So it's more of a politics, regulatory kind of landscape issue.
I think the government can basically destroy any asset by the tax treatment. Politics matter. Like,
I think the government could destroy any asset by the tax treatment. We have brought up and talked about as far as Bitcoin and one of the risks to it. Is it something like seeing BlackRock accumulating how many Bitcoin do they have now? Do, 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 do. If someone knows in the comments how many Bitcoin that BlackRock now has, please let me know. This is okay. No, I'm going to get it wrong, so I don't want to. I don't want to say. Um, and is that a concern about the amount of Bitcoin BlackRock continues to accumulate and will, especially when CEO Larry Fink has talked about confiscating property in the past? Is that a concern? Maybe, definitely, potentially. Is it more of a concern that if you were to see Bitcoin like literally shoot the moon, and I'm talking not, $1 million per Bitcoin, whatever per Bitcoin, is it possible then, people, I'm holding my Bitcoin because I want to pay capital gains? What happens if if the government comes in and they talk about windfall tax on Bitcoin? What happens if they're taxing that at 70, 80%, or whatever it could be? Lynn Alden has been consistent in talking about that as a risk to Bitcoin as well. It's something that you should be aware of. I think about it, and now hearing Michael articulate it is really positive. By the way, Bitcoin with very small inflows yesterday, and we saw small outflows outside of Ethereum. We have today Morgan Stanley beginning to pitch Bitcoin ETFs to their clients today. By the way, we still see other major banks such as Goldman, JP Morgan, Bank of America, Wells Fargo continue to restrict their advisors from pitching Bitcoin ETFs, only allowing clients access if explicitly requested. What does that mean to me? Even though we are seeing at first gradually pick up pace and working towards then suddenly, we are still far from the then suddenly phase. We are just jumping the chasm from you, the early adopters, into the early majority. And right now we're working towards the earliest majority. This is the earliest majority. Once we see different banks actually embracing their clients, taking allocation into Bitcoin, that will be the early majority really picking up. Also today, we see that Russia just legalized Bitcoin mining. Love Bitcoin Archive over here saying your move now, China. If you remember 2021, a lot of people believe that the top was suppressed on Bitcoin. A lot of people believe that had to do with actually Bitcoin mining being banned in China. If I could go ahead and that occurring around this area over here. Now, my own personal belief, and it was a tweet on October 16th, 2021, as the Fed announced through their meeting minutes that they were going to begin quantitative easing taper, setting up the end of quantitative easing. I personally believe, I said 2022, we're going to see a rate shock. That's in the tweet on October 16th. Rate shock. And I said Bitcoin is not immune. We then underwent the sharpest tightening cycle in history. Certainly was a shock to many. Bitcoin was not immune, coming off 77%. And here we are. I think it was more of a Fed policy decision than the Chinese backing off of mining. As you could see that hash rate continued very quickly, very quickly. By the way, at the time, Matt Odell thought it was going to take many, many years to recover. It recovered very quickly and then continued to grow to new heights. Personally, don't think that the China ban of mining had anything to do with it. But anyway, that's just pure speculation. Oh, for sure. I firmly believe so. And you know what? If we see and we look forward to, and what happens if we're seeing nothing more than a big coil occur, and don't forget, I'm taking it day by day, balance sheet runoff still occurring. Yes, Bitcoin had its biggest drawdown of the cycle thus far, but nothing has really changed. Now, I think that obviously most of the uncertainty about the yen carry unwind is largely over. It doesn't mean that the current phase of the market is over. We're going to continue watching. Do we follow the technicals? Yeah. If we have a breakout of this upside trend line, is that likely send us back in towards the launch phase? Yeah. I also think that's a pretty good reference point when we look back at this and we talk about, we had that major technical breakdown occur as we are entering the watch for launch phase. That's likely now what we need to say, okay, we've made the repair from the breakdown of 66K. The repair from that would likely be price above that. Price trades above it. Does it mean that we're off to the races? Not necessarily. Likely we'll have some type of pullback. We'll watch the steepness of the pullback. Does it come all the way back into the trend line? Or is it pull up like a higher low and shoot off? That would be very bullish if it did something like that. It could fail in the trend line. Again, it's about taking it as it comes. It's why we put the work in each and every day to stay on the right side across the markets. But I do believe personally that as far as ultimate price on Bitcoin for this coming cycle, it's largely going to matter, right? Notice I'm choosing my words carefully over here. Are we going to see other nation states adopt Bitcoin? El Salvador, shots fired. Are we going to see Argentina make a bigger move? Are we going to see other small countries falling like dominoes? Are we going to see a bigger country that was unexpected? As we see Russia move towards making Bitcoin legal for transactions in order to bypass sanctions and now making Bitcoin mining legal, how are they going to confirm those transactions if other people on the network are not, right? They like, are we seeing the BRICS? And again, the lead in was your move, China. Are the BRICS going to be able to transact in some type of agreed upon currency, some type of digital currency that is basically not trustless, but full of trust? Are they going to do it on good faith backed by gold? Or eventually, are they going to end up using Bitcoin? Russia's actions suggest that even though it might not be immediately in the long run, that it likely will be Bitcoin. It's permissionless, it's borderless, it's trustless. That's the way I see it going. I don't know whether or not it's this current cycle. I don't think that it's only dependent on nation state adoption. We're seeing the move into institutions, but more importantly, I think it's going to be what type of intervention do we see? What happens, and there's a chart I actually want to show really quick with you as we continue this discussion. And this is, by the way, a little bit of fun. And this is CTM over here as we continue climbing summit to summit. This is the second highest summit mountain on Earth after Mount Everest K2. And this is what we see now before us as we continue our move, summiting mountain after mountain. Wanted to show you this over here. This is foreclosures on the rise. We talk about in 2025, 2026 is really when we should see the commercial real estate market having a dramatic effect on the market. This is quite interesting as you look, and you can see that you're seeing foreclosures on the rise. But then you look at this big, huge peak. And do you notice when this peak is occurring? Largely 2010, 11, through 13, 14. And equity markets at that point in time, where Nasdaq had around this time is making its new all-time highs and then starting to really pump up. Obviously, Bitcoin is doing Bitcoin things during this particular period in time. Why is this not occurring during the crisis? And what was occurring during this time? Well, at this point in time, the Federal Reserve was running massive QE. And I think that's what's going to be dependent upon what type of reaction are we going to see? What type of intervention are we going to see going forward? Eventually, we will see intervention because eventually the Ponzi will come to a point in time when the music's about to stop. And the only way they'll let the business cycle play out for as long as they're able. But this, it's all very fragile. This house of cards is very fragile. And each and every day and year that goes on, and it continues to be built higher and stacked higher and higher, it becomes more fragile. You saw a glimpse of that just this week as the Bank of Japan barely raised interest rates to 0.25% from 0.1%. I mean, that's a small move, but look at the amount of leverage in the system. And when that leverage unwinds, it's all connected. Now, if the Fed, or it's not just the Fed this time, we talked about the U.S. Treasury beginning this year, their buyback program, now increasing it and setting up what could be the structure to actually at any point in time in the future implement some type of yield control curve. And if that were to happen, I think that you would see risk assets such as Bitcoin. I shouldn't say risk assets, hard supply, scarce risk assets such as Bitcoin, gold, really begin a major move. So it could come from the Treasury. It could also come from QE by the Federal Reserve being run in. Now, it doesn't mean, and it's not guaranteed actually, that is going to happen in 2025. It doesn't guarantee it's going to happen in 2026. We don't know when it's going to happen. Their goal, the Federal Reserve's goal, is to extend the cycle as long as possible, which is why the next step of the cycle after the cuts, in my own belief, and I've been saying this for years now, for a couple of years, is that likely before QE begins, they'll return to some type of balance sheet expansion. In September of 2019, Powell called it organic balance sheet expansion. Tech stocks, Nasdaq, melted up on it. Bitcoin didn't. Bitcoin continued under pressure at that point of the cycle for a little while longer. But by the end of the year, November, December, it had recovered and was trending up until we ran into the 2020 crisis. So I think ultimately, well, that's a lot. That's why we got to take it step by step. Nevertheless, constantly putting these things in front of you so that you have the awareness needed in real time to navigate. That's really important. Here we go. This is pullbacks that we were talking about earlier. So 5% plus pullbacks occur more than 3 times a year on average. I don't know if this is S&P 500 or this is Nasdaq. This is S&P 500, right? So a 5% pullback on the S&P 500 is more or less equivalent probably to an 8% plus or 9% plus pullback on average on the Nasdaq. 10% pullback plus occur 1 time per year on average, probably closer to something like a 17% pullback like we just saw. Again, nothing more than average. 15 plus corrections occur every other year on average, and then you have 20% plus pullbacks occurring every 3 or 4 years. We did see today, we saw our market keying off of, or the catalyst coming at the unemployment rate. We have a light calendar into next week where we get a lot of inflation data, including core PPI and then core CPI, I should say PPI and CPI. And then on Friday, retail sales. There was something there that I thought I was going to show you, but I'm not showing you. So I'm going to continue on over here. And I'm going to jump back and get into a little bit of our positioning. And we saw today Tesla entered the market on the short side. Now, FNGU, buy side only. TQQQ, buy side only. NVIDIA, Tesla, they both trade the buy and sell side. Tesla taking on the open today a buy and quickly stopped out on that trade, taking a full loss over here, 1.2% on the trade. Still on X templates here, roaring in the, well, there's that last peak over here. Well, I'll just call it as it is. I mean, Tesla now off of its all-time high here by 1.2%, looking really good. Now let's go ahead as we're seeing this really strong move occur across Bitcoin and crypto. Take a look at what's going on with our positioning over here. Bitcoin getting closer to resetting here. Remember, we attacked on the short side and stopped out of the last trade on Bitcoin. It cannot re-enter on the short side until we see a cross and a reset above the zero line. We continue to head that way with this price action, but still need time to reset. Ethereum here continues holding its short position, currently 18% into profit. We're looking at Solana out on the sidelines and now actually getting close to potentially or closer to hitting off a buy position. It would be interesting if Solana led on the upside, but it is 50-50 almost between buy and sell side. And Cardano is still holding its position here on the short. So we're seeing a major bounce over here. Our templates, Bitcoin is just neutral on the sidelines. Ethereum and Cardano holding sizable positions still on the short side, 15% into profit on each of them. And you could see with the exception of Solana, the heavy lifter, late 2023 into 2024, leading spectacularly in gains, is now into drawdown about 15%. Everything else, Cardano, Ethereum, Bitcoin over here, are all roaring in the bliss at or just off of all-time high account balances. Look at these. There we go. Thanks, Ace. We have over here for BlackRock. Wow, this is 1.5% of the total supply. 345,000 Bitcoin holding as of yesterday. Today, with Bitcoin rising significantly in price, we're going to have a major positive inflow day. You could see that since the end of July, where we had $124 million, since July 22nd, 485. I think that it's going to be a major inflow day today. There is a correlation between the outflows and inflows and the price, and we will witness that tomorrow as we continue forward. So, what else is there to take a look at? Let's go ahead and drop down and get back over here. This is yields. You could say that, boom, bouncing over to here. They're bouncing into an area of resistance, right? In this area, just above 4.1%. In order for us to see some type of major reversal coming, it would be above this trend line. That's just a conservative repair. By the way, it's been a second since anyone, when I say a second, I mean more than, if you would, go ahead and hit that like button today. Really appreciate it. Let me go ahead and just draw this down. We're showing over here on yields what would be a triple black diamond, a double black diamond, and then a conservative repair. We're in a strong impulse, but that looks like it's setting up for near-term capitulation over here. So we will track these and watch these as they occur just for fun. We want to always continue working on our discretionary TA. We talk about discretionary TA, be the best at it, but it's just for fun. There's nothing that comes close to our mechanical strategies, well developed and proven by CTM. Speaking of which, we had here a new addition upgrade over here. Since we opened up CTM in December 2022, January 2023, and we had a bunch of new people join us over the last 18 months. We have seen a significant amount now of talent move up through the ranks. It generally takes about 12 to 18 months to see someone move from CTM to CTM Core. By the way, it's also worthy of noting that the way this group works together is that whatever CTM Core is able to determine is our most highly valued candidates across stocks, across Bitcoin, meaning stable, most profitable with least amount of drawdown, most consistent across all different time periods. CTM has the same exact access that CTM Core has to these templates over here. We work together as a team, but we are and have seen people move up in the ranks that are contributing in a way that helps advance CTM. Walter has just moved up to CTM level. He says, not to get too sentimental, but CTMX and the mechanical approach has completely changed my life since being introduced to it. That right there, it has to make everyone involved really, really smile, knowing what it is that we are doing. Bitcoin up 8%, Ethereum up 10% on the session over here. As we're seeing yields begin to rise over here, likely that means oil might be on the move as well. Let's go ahead and take a look at what oil is doing here this morning. Not really, right? So we found another bottom. This box over here is what the Biden administration has suggested is their zone for refilling the Strategic Petroleum Reserve. That seems to be verbal, as that has not really come to fruition. They've actually refilled at higher levels, and when price was below it, they didn't refill. Nevertheless, we'll keep it on there right now. So we have this underbelly over here that's in the market, tracking it, watching. I'm looking at this peak over here, right? We'll keep it where it is right now. That's pretty clear as well, but we'll just from afar, I guess, keep it as we had it. I'm trying to see when we would have a legit buy impulse take place, and I think that we missed it because we weren't paying attention. When I say I think that we missed it, and I just want you to see, and I want you to learn little by little and take away each and every day. You know, we talk about often, and it's the truest thing. Our objective each and every session is to continue to up our overall knowledge. It's that small incremental gains that lead to, as you look back, massive compounding of progress. What's interesting about CTM, and I don't know another community like it out there, what's interesting about it is, do you remember in 2020 as we got started? I was like, listen, the whole idea here is I'm just going to share everything that I've learned these past 20 years in the markets with everyone. And I'm going to build up everyone around me until it becomes a constant feedback loop where it's iron sharpens iron. That's what we have today. That's come to fruition. That's been realized. And now, instead of you as an individual growing and gaining that incremental knowledge each day, it compounds at an exponential rate throughout the whole community. It's beautiful. What I'm seeing over here, I didn't see it in real time, but and I can't get the structure, so I don't really see it. But I'm looking for an underbelly, right? And you can see it's not clear because the underbelly would have been occurring there. So this is resistance. That was and would have been the entry. And I'm just pointing it out in order to help myself and you learn to recognize that in real time the next time it occurs. That's all. Little learning lessons. So, I enjoyed today's session immensely. Beautiful stuff, everyone. If you are here on the replay crew, big shout out watching this on the replay. Go ahead and include any perspective that you took away, something that was triggered as we were discussing the markets today, something that we could continue to build off tomorrow. And just go ahead, leave a thoughtful comment so that tomorrow's session, I could take a look at it and review it with you all as we continue forward here. Everyone, have a beautiful day. God bless you, and I'll see you all tomorrow.